Good afternoon, everyone. It is December 4th, a few minutes after 12 p.m., and we're back with another edition of Chart the Markets. I'm here with my good friends from FEG Token, smartdefi.com, and of course, our exchange partner, BYDFi.com. And all you have to do is head over to BYDFi.com, open up an account with the code K, capital K, 5, capital Z, 4, capital T, lowercase p. That gets you eligible for our trading bonuses that we give away every week to our new users. So head over there and open up your new account. And I thought I would kick off today with the FEG token chart. And, this is a chart that has, obviously, like many that you've seen, been beaten up and had its moments. And we're constantly waiting for times that it shows us that maybe it wants to do something. And, just flipping through some charts before we came on today, and I noticed this big green candle after this long period of consolidation. Now, is this the candle that's going to change everyone's life? I don't know. There have been others in the past, but this is actually a good look, especially on a day like today. Does it have the staying power to last? I don't know. But what would the targets be to the upside? The lower value range, and as all we're looking at is our script using the T line, the 5 EMA. Here's the lower value range from the volume profile, the point of control, and then the upper value range. Those would, be some obvious targets to the upside. But like we always talk, how do I get a really good entry on the daily? Well, you usually look to the 4-hour. And you'll notice if you're watching this 4-hour chart that you got a buy signal yesterday in the early evening. Now, you can see price really went parabolic in a sense. You kind of opened up the T line and the 5 EMA showing you the momentum higher. But are you a little overextended from the levels that we feel are kind of where you want to stick to in a trend move? A little bit. The takeaway, though, is that because the candle's not reversing hard and it's just kind of hanging around up here, it might just be waiting for the rest of the kids to catch up before it makes a move again. And I see this volume gap here, right? Because that's the benefit of the volume profile. You can see where the money or the volume has and has not been. Price can really shoot and drop into those gaps. So that would be the upside hope, that you'd kind of get into that zone and start pecking away at these other levels. You can see how important this level is in here, though on the 4-hour it's somewhat structural, so you want to be able to break that and get into this gap and start to move higher. But it certainly is a good look, especially with what's going on today. So this is yesterday's candle, you would have been in this trade somewhere in here. And then someone, you're going to be able to say, hey, you know what, I basically picked the bottom of a wave. Right? But that's how we do it. We're just looking at the shorter time frame and then seeing if we get confluence on the longer ones. Now, if we start to add some context to this FEG chart, we add on the 20, what does that tell us? Right? We're always trying to break one level so that we can find the next, and we've really bolted through the 20 MA on this chart. Right? You want to be able to hold it and maintain it, but there's your next level. I'd look to the 50 and this leveling of price back here, right? Again, you might consider that somewhat structural and you want to break through it. There's that lower value range, and of course there's the 200 MA. And we know that if you can break the 200 and start trading north of it in a meaningful way, in a sustained manner, that's an indication of a bullish trend. So here it is hanging around up here on the 4-hour, almost in the middle of that gap. So, there's lots of room for price to move higher. But I thought that was a real interesting chart to look at today. There's the 50 again. So that's encouraging when you see that. Let's switch to Bitcoin because we have lots to talk about. Now, what did we speak about in our last stream? Does anybody remember? We talked about what would happen at what level. The 500-day simple moving average. And this is something that we talked about at length. This is why we do what we do. Be very careful longing into resistance. And that's what's happening here. We're longing into resistance. You had a couple good days. We talked about this. This is Tuesday's candle. Yesterday and today, warning you that you had to be careful about what happens at resistance here. Upside, sure, you want to get into that gap and you want to start looking for the next level up. You could use the lower value range as a target without a doubt. But you got to get through this level before you can do anything. And just like we showed you on the FEG chart 2 seconds ago, look to that 4-hour chart for a little bit of insight to what might be coming next. And this is a very, very good example of what we're talking about. What could possibly be hanging around up here, giving us some sort of resistance? What's the draw for price? The 20 MA and the 50 MA that are basically sitting on top of one another. To get there, you have to start to venture into this volume gap. And in doing that, you could really get sucked down to the to the POC quite quickly. The 100 MA is still well within that gap, so I don't think it would hold ultimately. And then you have to start looking down. There's the POC, there's that other, it's a lower value range. If this is a failed breakout, this is the really hard part, right? If this is a failed breakout, and we typically know that price comes back to take out the previous wave's low. So what you're hoping for is that you get support, because this is going to be the first touch of the 50 and the 20 MA on this time frame, since it broke it here. And those first touches actually kind of broke everything here to the upside, so it'll come back and be a first touch for all of this. My concern is the momentum that would come with a downward move falling into that gap. Now, have we triggered a sell signal as of yet? No, not yet. But we kind of have on the hourly. And that happened at 6 a.m. this morning. So could we say that, oh my gosh, we had no idea, didn't know this was going to happen? Yeah, you did, right? We did. What do you think this consolidation here is on the 1-hour chart, right? It's the resistance of the 500 MA on the daily that we're encountering. That's what that is. That's what this is here. So that 500 MA that we keep hitting our head on, unable to break through, that's this level, 93.6. Let's go look. $93.6. Yep, it's in here. The top of these candles. That's what it is. This here. So, and that's why we use fractals, right? That's why we use different time frames, so that we can start to layer on some context onto our chart. The 1-hour chart was telling us, and yeah, it was choppy. You're going to get some signals bopping around in there. That happens. But the ones that you're really interested in are the ones like this that fail major moving averages. This one happened to print a signal right on top of it. And the reason it was able to do that is because these levels came together over time, right, as price went sideways, because they weren't in some sort of a extension move up and down. So it doesn't take too much to roll one over. And by this point, you're going to be, yeah, you were getting told that this thing was fading. See all this stuff. That's the energy coming out. What do you think price is looking for now? This is the failed breakout that we talk about all the time, right? Resistance at a place that you can expect, the 20 MA. What happens? You start to roll over. Price is looking to take out the previous wave's low. With the point of control, the 200 MA, and a whole bunch of other opportunities for price to fall to the downside. That's kind of where we're at. And you can start to see over these multiple time frames. This is the 12-hour. Do we like to fail the 50 MA on any time frame? No. So as you're looking at those shorter time frames, you see the 1 hour is starting to roll over at the 20 and give you a sell signal. Your 4 hour is doing the swan dive to the downside. On the 12-hour, you're failing the 50 MA. Haven't completely failed, like this is obviously still bullish, and I put that in quotes because you can see the momentum higher. All this stuff is still intact, but you can see it starting to deteriorate. And then there's your daily. So that failed breakout that we saw in that 12-hour is this level in here to bring you right back to the 5 EMA or the T line. And if you come back there on the daily, that doesn't necessarily mean it's a melt, does it? You could find support in here too, and then the beat goes on. But we're certainly at a critical juncture, that's for sure. And if we look forward even more, just to go to the weekly really quick, what did we talk about earlier in the week and last week? This is the first wave down on the weekly. Everything is fractal. First wave down on the weekly, retracement higher. But we haven't broken any of these key levels yet. And until we do, this is the downside risk, that you roll over again, right? This time when you come back to test, you're not able to hold it. Notice this gap in here. So if you were to roll over again, fall into this gap, test this for a second, third time, fourth time, and you don't hold it, well, that's how you find the 200 MA. And this stuff in here, all of this past price, that place where buyers and sellers have shaken hands in the past, is going to be a place that price will look like if it can't maintain its momentum to the upside. So on the daily, what does our chart look like, right? We have us move down, a move higher, find resistance, downtrend continues, fail that resistance, downtrend continues, can't hold, test and fail. Are we testing and failing again? Now we're making higher lows, yes. So we'll see what ultimately comes out of this, but you can kind of see where this potentially could go. And that's where, it might make you feel uncomfortable. But you can see what you're looking at on the weekly is just that one first move and then a couple retracement candles higher. Well, you can see how it's done this several times on the daily. If you start printing the same type of stuff on the weekly, does that maybe tell you that that's a bear market, bear trend, whatever you want to call it? Sure. And you can see the levels to the downside are very obvious. How do you find these gaps? And why are they there? They're there because of these big, big, big fluffy candles that are filled with just fairy dust and air. And then when you have to use them to hold price up, when it pulls back, they don't have a lot in them to do it. They're pretty, but not a lot of substance. And then you can see break one level, find the next, break one level, find the next, break one level, if you're to do that again. you can see how you find that again, the 200. All right. Let's look at ETH, because, are the cousins walking in the same direction? Let's find out. So now we're looking at the daily chart. What's our resistance to the upside? Well, you have structural price levels, and you have the 50 and the 200-day moving averages above you. So we're in that position now where over here everything was support. Now it's resistance, right? And it is some work to start to capture those levels again. This is still, although it's a little toppy in here, still bullish. Yeah, absolutely. Right? Not unlike the other chart we looked at where you're just kind of hanging around. You're not really retracing hard or even testing these levels. You're just kind of waiting for everyone else to catch up, and that could be the trigger of another wave higher, which would start to look for this level in here. Let's go to the weekly. So what's the test on the weekly chart? Right, same example on the Bitcoin chart where you've got this big wave down and then a couple weeks of retracements to the upside, but that doesn't necessarily signify or signal trend change, does it? No. So are these candles just going to be, 2 or 3 green candles that fail at the T line or the 5 EMA and then roll over? Don't know. We're going to find out though. Right? And so you can kind of see how if this was the daily chart and this was the first, push to the upside, you wouldn't be too panicked until you saw 2, 3, 4 of those waves. Well, how does it feel if you were seeing 2, 3, 4 of those waves on a weekly? Right, that's longer term pain. And again, being aware of the downside risk is kind of always my priority now. I used to swing for the fence. Now I look for the risk first, and everything else seems to work out instead of striking out. This 200 MA down here on the weekly ETH chart, to me, is still in play, as well as the POC. This is not a confirmed breakout. These could just be 2 green candles in a downtrend that continues. We will find out, and we can go back and check the tapes to see if we're accurate or not. But I think that's the risk. And look, is it obvious that we're kind of breaking these levels and finding the next levels? Yeah, it is. We could simply come back to the T line or the 5 EMA and hold and then bounce, and then all of this would be for naught. But you can see how these things start to unfold to the downside. And how you don't get surprised is you just keep looking backwards. There's ETH's 4-hour chart. Do we like to fail the 200 MA? No, we don't. Is this the first challenge of the 200 MA on the 4-hour since it broke it? Yes, it is. What do you anticipate to happen at those first touches? You anticipate some serious resistance or a failure. If you blow through it, that's a whole other conversation. This is not a good look. What's the downside risk? We know if we break one level or we fail a level, we're looking for the next level down. Well, here again, the 20 and the 50 are basically on top of one another, just a hair below the point of control, and this is at 3,000. So you fall into this gap, right? We talk about how the velocity and momentum of price, when you get into these gaps, well, you're starting to see it. This is the target to the downside. Look at how your 5 EMA and T-line point out like that. That's price moving quickly, and the short-term averages pick that up really fast. And the red reflects the sucking sound of selling, right? That's money coming out. Money going in when it's white, money coming out when it's red. If we look at the weekly, I think our volume profile will still work. That's $2,500. The weekly point of control on the volume profile. The daily point of control is $2,500. You see where this could go? When you have a concentration of past price at this on a weekly chart and the daily chart that is the POC aligned in both cases, that's a serious draw for price to the downside. So it's going to take a heck of a lot more money to continue to push, right? So the risk to the downside here, because these levels are aligned on both those time frames, just makes me want to keep more than one eye on that level. And if it does get down there, I'm not suggesting that it stays there forever or anything like that, but it's going to be a level that you have to pay attention to. If you're going to get a bounce to the upside, like look to the left of your chart, you're going to see more price in here at the same level. So if you are going to get a bounce, keep an eye on that 2,500 level. If it fails that level, well, then we're telling another story, right? But the draw for price down here, I think, is legitimate. There's a lot of it. It's pretty obvious on the weekly chart. It just cuts right through everything. And again, we're not saying these things because we want to hurt people's feelings. We're just trying to help you understand what's going on when you look at the chart so that you're not surprised. Let's look at XRP, another chart that we've looked at many times before. That's the 215 level that we laid on ages ago, and price found it. Why did it find it? It found it because it had been there before and spent a lot of time there before. So when the pullback comes, those are the places that you look for price to go, because current price revisits past price. Here's your daily chart. Support, like, these two train tracks right at the 500-day with equal bottoms, right? We like those candles. We know, here's your buy signal, but we know that our resistance is the 50 MA. Boom, what do we print? And again, it's not an accident that this happens at this, in and around this 215 level, right? It's doing this here because it spent so much time there before. Right now that it's here, it's got to figure out if it's going to be bullish or bearish. So we're printing a sell signal on today's chart. Let's look at the 4-hour. When did it come? Right on this very same candle. So we didn't really we didn't save too much. This is a pretty quick pullback then. When we look at our 4-hour chart, what are we failing? The point of control, right? That's this thin red line in here. Price just really can't seem to break it with any meaning. Every time it does, it pulls right back to it, like a magnet. Here's your like, look at this candle, right? Blows apart all of this. That's the momentum. Let's look at it as it would be unfolding. So, whoops, there's your massive candle that's rejected where? The 50 MA. You wick it. Is it the first touch since you broke it? Yes. What do you expect? You expect it to fail. Doesn't fail. There you go. Right. Don't ever think that you're too late. Right? There was still, if you could enter anywhere in this candle and still be okay to the POC, or to the POC. Because you see to the left, that's where it's been before. The draw for price to that level as it's moving higher is significant, again, because it's been there before. Doesn't mean it's going to stay there. There's your doji at the top of a move higher, and you start to roll over. If you are unable to hold the 20 MA, now you should want to hold it, right? This is the first time that you're seeing it on the pullback since you broke it over here. So you would have an anticipation that price would give you at least a pause, at best a bounce. But if it breaks that level, what's the memo to us? If it breaks that level, it's going to come with some momentum in all likelihood. What is here? Big gap on the volume profile. So you're trying to hold this 20, because failing it puts you into this gap, and then what do you have? This is a failed breakout, right? And you come back and start to look for the previous wave's lows. Do you think price will want to come back to test this level again? Probably. Right? That's what I would expect it to want to do. And there's your weekly. And the weeklies, you'll notice, will look a lot cleaner, right? They're taking out all of that nonsensical daily volatility and intraday volatility, and they're showing you the trend very clearly. And this XRP chart, that's, what is that, Black Friday, I guess, or something like that, whatever this week was. And the divergence between the T-line and the 5 EMA have been consistently moving to the downside. Is this helpful to you when you're looking at the daily chart? When it looks like it wants to break out? Yeah. Because what you'll see is what's really going on. Price can't break the T-line. Can't break the 50. And in every case, it comes right back and starts trading below the 5 EMA again. We have no idea what comes after this week's current candle until the next one. All we know is that we're trading below these levels. Anytime you're trading on the south side of the T-line and the 5 EMA, you should be short, or you're in a downtrend. Trading on the north side of it, over here, obviously, that's an uptrend. And as long as we see this divergence and the inability for price to pull these shorter averages up and start to challenge these levels higher, the trend is still intact to the downside. And that's the simplest way I could probably kind of speak to it. And this is a day that started a little bit stronger. If you're even up early in the morning, I think we were green at one point. Now we're red. And everything wants to go red. Here's Solana. I think we had the same kind of discussion on Solana, right? We have to be cautious of these breakouts, because not every one of them is real. Are we, making these kind of lower highs? Yeah. This one was the first that actually came close to breaking that. But here we are retracing right away. Let's look at our 4-hour. There we go. There's always a clue somewhere, isn't there? 4-hour chart of Solana. This 200 MA is essentially in the lower to mid range of that volume gap. Knowing that the 200, I bet you this is the first touch. Yep. So you challenge the 500 and the 200 up here together, and it's been nothing but capitulation since. First attempt of the 200 MA fails. Now, this could be the weekly chart for oil in September of 23, essentially. What do you see? You see a doji at the top of a leg higher. Pay attention to those, because they're part of the story. That maybe you've kind of topped out and it's time for a little bit of a pause, a nap, a snack. Doesn't necessarily mean everything rolls over and dies, but nothing goes straight up and nothing goes straight down. I would have, what you were really hoping for is that price could break through this 200 MA within this volume gap, because you know that when that happens, price will just boot up into it. That's not what happened at all. So this is just simply, at least for now, this is a first attempt failure of the 200 MA. My takeaway, though, is because it's the 200 is bearish. You're bearish when you break it. You're also bearish exponentially when you challenge it for the first time and fail it on any time frame. And we're looking at the 4 hour again because we like to see if we can get a window into what goes on the daily. No sell confirmation or anything like that yet, but we're just kind of showing the downside risk. The POC, the 50 MA, the 20 MA, even the 100's down here. They're all together. So price is going to be drawn to those levels. It's just current price revisiting past. And it just happens over and over and over again. Let's look at BNB. It's almost like these charts are all identical, right? A little different up top here. This was a, printing that kind of M murdery pattern at the top. But has this been in a consistent trend to the downside? Yeah. Right. Again, here's the weekly. It's going to take out a lot of noise. When you start to see, now this is a weekly, remember, so this is a significant time frame. When you see these candles like this print at the top of a leg higher, pay attention. Like when that second candle creates that equal top and starts to go red, like you can usually tell that there's something going on, both up and down. You reverse the chart and you'd be saying, wow, that was obviously a bottom. But it's certainly an indication of toppiness. Where'd price come right back to? The 20 MA. Does it hold it? Nope. And how do we know? Look at all our divergence here to the downside. So as we're seeing this green candle, it's not giving me any reason to long. It's just a green candle in a downtrend, I believe. So this, it's the next weekly candle that I think is going to be really interesting. Does it find a way to, break through here? Because if it breaks through these levels here, which is the 20 on the weekly, if it can break through it, is there anything in its way? Not really. And it can start to make, this just could be a big move that somehow found support in around the 50 and pops up. And then we're talking about, oh no, we have, a double top. Well, this would prove just to be a retracement, although a deep one. And that's what happens when you go parabolic. And that's why all of this is so painful, because we continue to do that over and over and over again. Let's look at Aster. There's the daily. Now this, again, there's not a ton of trading with this thing, so we're not going to see much past what you see on the screen here. But what are we in a downtrend? Yes, there's your confirmation of a sell signal. And price is unable, even these two green candles appear just to be, for now, retracements to the upside within a downtrend. This divergence is still here. This could turn out, again, to be a failed breakout, and then we're rolling over. Let's look at the 4-hour, because, again, we don't have a lot of trading. So, see, there you go. It's the 50. That's what you're hitting your head on. And there'll always be something, whether it be, structural, a major moving average, the point of control, or the upper, lower value range. There's always something. But here we are. We're struggling with the 50 MA. Like, it's obvious that it has some sort of an allergy. It hasn't capitulated, which is good, but you can see the struggle. Now, you're still in on the 4-hour. Still in an uptrend, although you've had some selling, but the chart is still, again, bullish. If price continues to fade and rolls over, the 20 becomes your target to the downside. And of course, the lower value range, and so on and so on. But I think, the concerning thing on some of these charts is that they just don't seem to have the ability right now to find another gear when you really want them to. Right? And that's just, I think, that overhanging bearishness that still exists. Right? Let's look at Zcash, because it's been a bit of an anomaly here, right? This is the 4-hour chart. Now, we've been in here before because we've established some levels. Look what price, look at this. 500 MA pink, and this 297.68 level, or whatever that is. Boom. Now, this has been here for a while. Why is it here? Because it simply lines up this past price through here, right? That's all we were trying to do. We knew the 500 was here, and we dropped this level in just because we're lining up past prices. We're kind of dividing these support and resistance levels on this time frame, because it's a point where it's showing us that it's been before. And look where we hit. That's crazy. Bang. Now, price is looking for, now that it's bounced at that level, there's your buy signal on the 4-hour, splitting through the 20, right? Oh, there's your next candle. This is the flush candle that we talk about. Here it is again. These ones will either stop you out or scare you and wash you out of that trade in many cases. But the cheat code is look for these as the follow-up. Okay? There's trades there for you. And here we are. Where do we go? Still bullish, yes. That's your target at 50 MA to the upside, right? You're just breaking one level and looking for the next level. And the benefit of doing this is so that you can set targets. In other words, you know where you're getting out before you even enter the trade. So, did you break the 20 up here and find the 50? Yes. Did you then find the 100? Yes. And so on and so on and so on. So, when you came all the way back to this pink level, which is 500 days, which you're thinking is not going to happen, right? As you're watching this on, no, there's no way. There's no way. There's no way. Well, here you are. Do you buy here? Yeah. Is this the first touch since you broke it? Uh-huh. So you can feel comfortable maybe finding an opportunity to get in early. Do they all run? No. But the areas where you're going to find, if you're trying to find the good entry on the daily, you might be able to sneak it in on the 4-hour. And if you get the confluence you're looking for, you'll get that buy signal on the daily, and hopefully it continues to run. Notice your resistance for price. So you've got this big move down, a couple green candles that retrace to the upside. Where's the resistance level? Right at the 5 EMA. I'm not going to apologize if it seems magical that this always continues to happen. Why is it these levels that are so consistent? I don't know. The why doesn't really concern me. The fact that we can chart it, track it and monetize it. That's the important part. Move down. It'll pop at the area that we expected it to get support at. There's your resistance at the 5 EMA. We know what happens. If this is a failed breakout, you roll over and take out the previous wave's low, and this turns out just to be a very simple retracement in a continued downtrend. Break through it to the upside, well, then you're looking for the 50, you're looking for the 20, you're looking for price to move up with some velocity into these gaps. You broke the 50, I believe you're looking for the 100. Right? Breaking one level, finding the next. And if we're wrong, we're wrong. Right? And where are you going to pick up a change? You're going to pick it up again on these shorter time frames. Probably don't want to go too much smaller than an hourly if you're looking for the daily entry. Now, what's the opportunity, to the upside is this big gap here on the 1 hour, right? Bringing you back up here because there's a lot of price here. So it's just breaking one level, finding the next. Use, this method of determining is price bullish or bearish, right? This is an example of what happens when price goes parabolic. You fan out all of these levels, right? This is why people say you'll never see prices this low again. But yet we know we do. Right? Because price comes back and tests these levels one level at a time. Nothing goes straight up, nothing goes straight down. But when you break one level, you'll find the next. And the only thing that's going to stop that is an influx and inflow of new money to change trend. And again, we pick that up on the shorter time frame. So there's really, because we're using fractals, no reason that we should be too surprised. Okay? And again, don't be afraid, guys, in the chat there. If you wanted to shout out your other charts, we can do those as well. I'm just trying to go through as many as I can. Where is it? LLY. What's Lily? There's Eli Lilly's chart, a chart that we've looked at quite a bit over the last while. Here we are looking at the chart after the whole move's kind of unwound, right? But let's just go back and do a candle by candle move, right? Whether you're trading short time frames or longer time frames, our system will work, right? But off this daily, like you could be trading very short-term options or commons maybe. But when you get signals like you see here at major moving averages that you hope to find some support, like look, you've got like 4 or 5 candles walking up after that bounce of the 200, little tag right here. Right? Did it give you a signal to the downside? It did. There's a gap down day for some reason, but it bounces and price goes higher and just continues to go higher. What do we see up here? That little doji at the top of a bull run. It's really extended. You start to print flats, like points and flats, points and flats. Those are the things that indicate changes in direction. And there you start to fade. And finally, there's your sell signal. Right? This was the market figuring itself out, and there's your confirmation to the downside. And if you don't want to give away a little bit of this up here, again, shorten that time frame up. Go to the 4 hour. And you'll see on Monday you got your sell signal. And actually, if you'd be looking at this on the 4 hour going, yeah, I don't like this, right? And there's your confirmation. So that's how you sneak the entries in on the daily charts. I just simply back up my time frame. And then ultimately, if I'm lucky, so we're in on this candle on the 4-hour chart. We got the confirmation on Wednesday on the daily, and today you break the 20. Now, because we're in up here, look at the cushion that we really created, right? Like, we're not here to pick tops and bottoms. That's not the game. But it's just getting good entries is really important, because when you get a good entry, and this is why I pulled the time frame back to the 4-hour, it gives you the flexibility that if price does something irrational, right? After you get your daily signal, you have a little bit of a cushion that you wouldn't have had otherwise. And it will cause you less stress and anxiety. Of course, you're going to be looking at the time frame that you entered on, obviously, too. But getting the good entry will save you so much angst and anxiety later on. If you get a late entry or one that starts, you get price retracing on you real quick, then you're stressed out. Oh, what do I do? Am I going to get stopped out? Blah, 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 blah. And the list the story continues. We know all the time on any time frame what price does. Break one level, find the next. I don't know why people don't get it. Pretty obvious. And we show it on different time frames on different assets, time and repeatedly. The 4-hour chart is going to kind of give you some insights to what may or may not be happening on the daily charts. And I highly suggest, if you're not using a volume profile, to use one. Now, the volume profile does come as part of our script, but if you're not using that, you can simply grab the volume profile from the indicators section on TradingView, which is right up here. Type it in the search bar and it'll pop up. All right, so let me just take a little bit of this stuff off this chart real quick. This is Apple's daily chart, and Apple is starting to look, again, like a few other things, a little top heavy, but let's be honest, does it continue to get support? Like, these little retracements just bounce. Yes, that seems to be the case. So when I look at this, you can see the daily that our levels are spread out. At least our MAs are spread out. And why are they spread out? Because they had an opportunity to kind of twist together a little bit, and then when price goes parabolic up or down, this is what happens. In this case, it was to the upside. So price, in its momentous move higher, spreads out these levels, which is great, right? We love to see that, to the upside when you're long. But again, nothing lasts forever. And what do you expect on this chart currently? Well, we're getting a little toppy. Would you expect it to come back and test this 20 MA range again? Yeah, probably. Maybe even the 50 this time, because it's tested it and bounced, although it breached it several times, right? So I'm looking for it to come back here to 265 if it doesn't hold, right? It could bounce just like every other time in and around the 20 MA, and then what are you doing? You're coming back, and then you're taking out those previous waves highs right here, and so on. If you go to the downside, you're taking out the lows. This area in here is a significant amount of price, which aligns with the 50, so at some point they may tag. It's just a matter of time and price coming together. Going to the 4-hour, you haven't hit the 20 yet. Look at these gaps and the POC. This is really interesting to be able to watch these right now, especially on these 4-hour time frames. Like these gaps in here. Like if you get a little bit of a reprieve, at the point of control on the 4-hour, you better hope it sticks, because this is a massive gap to the downside as well. And this thing's getting heavier as we talk. So let's see what else we can find. D-wave. 4-hour D-wave. Let's look at it right here. So there's our 4-hour buy signal, and you can see this one, you know, you can see these two levels break out to the upside quite quickly, which is a sign that there's some momentum there. You take the 200, now you've taken the 50, and you're looking for the next level up. And the benefit is it just gives you an opportunity to create targets even before you get in the trade. Right? So let's just say you took this green candle, or even this one off the 20. Either one would be acceptable to me. What's your first level that you want to break through? Maybe you want to take some money at the 200, or maybe you want to wait to the 50. But the point is that you get the opportunity to set targets for yourself so that you can, you know, take profit, maybe add. Maybe you think you're in the midst of a trend move, and you break through the 50, and you're like, you know what, I'm adding to this thing. It might have some legs. That's okay too. But here's your 4-hour chart. This got you in yesterday right at open. And here we are today. Same thing, got your signal on the exact same day, and this thing is charging for the 50. It's very easy to see what price is looking for when you use the volume profile in combination with the other things that we do here, like looking for these levels of past price, because these levels of past price that we're looking for, knowing that it sits in this gappy area, because everything north or south of the POC is going to have some gap in it, because this is the base, kind of like the equator, you know that price is going to shoot up there, or the probability of it shooting up there is very high, and it's doing it again. Right? This is why we use these things, and the benefit, we can use them on any time frame. We can trade in and out of them. We know they're there. It tells us where the volume has and has not been. And price can shoot through those areas quite quickly. There's your hourly buy signal. If you're looking in real time, you would know that that gap's there. This, you know, this thing's got some legs. Maybe it's looking for the point of control on the upside. It's broken the 200 on the hourly, which is a bullish takeaway. 5 EMA and T line still diverged apart and trending higher. So that's telling you your trend on this time frame is still good. And you just follow price. Right? We are not front running anything. I don't know why that's a thing. It's just riddled with risk. Just do what you're told. Here's a 4-hour here's a 4-hour signal. Breaks the 50, gotta love that, and this thing goes nuts. We just do what we're told. And even if you exited here, right, which is okay, like, nobody lives a perfect life, right? Nobody lives a mistake-free existence. No one lives that. Right? If you decided that you didn't want to hang around on this time frame because you got that signal, then get out. If price reverses, you can get back in. That's okay. Like, so you took your money. There's no shame in that. If you feel like volatility is making it hard for you, move your time frames out. right? The longer time frames are going to take the noise out of the chart. And it's a real-time representation of what money is doing, not what people are saying. And they are two very different things. And anyone who thinks they're the same is naive. The only thing that matters is what price does. You know, there's no special popsicle if you get to guess where Bitcoin goes in 6 months. It's really not what it's about. It's just about having the ability to be aware of what is going on the chart, knowing that current price revisits past. And when you break one level, you find the next. When you're trading on the south side of the T-line or 5 EMA, you're probably in a downtrend. When you're trading on the north side, probably an uptrend. Like, just do the little things right. Don't be short here. Don't be long here. Start with that. But get off the damn 1 minute time frames and the 5 minute time frames, because you have no real concept of, you know, what you should be looking for. Like, you could be long on a 1 or 5 minute chart on this candle, but if you don't know that this gap here is beneath you with the POC and the 50 and the 20 sitting there waiting to be sat on, you're probably going to get squished. Get off those short time frames, start paying attention to the longer ones. At the very least, you'll be able to understand where the risk is. You don't want to long this candle. Right? Everything's fractal. When you look inside this 4-hour candle, it doesn't look fun. Right? It's a chopped up mess to the downside. Stay away from that stuff. Whatever you think, where is our, here it is, layer. Like, this was one of those things I show it because it's fun. Like, look at this thing. At one time, you couldn't short it to save your life. Why? Because it was in a massive bullish move to the upside. Now, you can't long it to save your life. Look. There's just not a lot. It's still trading below these levels, and until it breaks those levels to the upside, probably have a better chance of having a successful short than a successful long. This was of a successful long as opposed to a successful short. But don't fight the chart. And I think a lot of you are. You're telling me that you are, actually. You know, because everybody wants to trade long, everybody wants price to go up, and I understand that. But, you know, don't be the one to catch those falling knives. You don't have to long into resistance. That's why we spend some time on it. Right? You don't have to long into resistance. Don't do it, especially when everything is susceptible to sudden moves to the downside, because again, you'll find yourself getting squished. Right? CFX. Take these levels out. We've been in here before. It was another great example of when, you know, price was just simply moving to the upside. Couldn't get, you know, you couldn't get in its way if you tried. And then you're going to come back and eventually test the 20 MA. The horse is too far away from the barn, and it's going to come back and check the 20, which it does. Does it hold? No. What does it find? The 50. Are we surprised? No. Because you break one level, you'll ultimately find the next. It doesn't happen in one candle. It's a process. Where did you find resistance here? At the 20. And if you're watching this daily chart, you're like, yeah, not happening, not happening, not happening. There's the POC. Price can't, and now you're dealing with the 50. Like, this is just one move to the downside. Once that big momentum broke, look where you see where you find resistance all the time. It's typically at these major moving averages. And here we are today. We still can't get out of our own way. And it's not anything critical against Conflux. It's just what price looks like on the chart. There's the weekly. Very clear signal to sell or go short. And at no point has price given you any reason to long. Now, if you take off these candles, you're not looking at these wicks. They're not there. You can't see them. All you see is this big move to the downside. I flip the candles off all the time. Right? When you do, you'll probably find, your anxiety level drops a notch or two. Right? But you've got to use these multiple time frames in order to see what's going on, and so that you don't get hit by something that you didn't see coming. Everybody wanted to cry that the end was nigh for gold. Here's the daily chart. Did it have volatility? Yes. Did it break did it break the 20? Here it did, but held it here. Hasn't even touched the 50 yet. Still a bullish chart. And okay, so it looks toppy there. Go to the weekly. Is it any smoother? Yeah. Like these 2 weeks, and even these red weeks, never broke the T line. And here you are again, trading above it. This is still a bullish chart. So all of the naysayers, sell this and buy that, was just talk. We're not interested in the talk. We're interested in what money does, not what people say. I don't care what other people say. I don't care what some of the smartest people in the world say. I'm only concerned about what I see on the chart. A real-time representation of what money is doing, not what people are saying. And again, they are two very different things. Is this chart extended? Has it been bullish for a long time? Is it due for a test of the 20 like it did here and here and here? Yeah, it is. But I think this proves that just because you come back and test these levels, that, every time some guy on Twitter said, oh, you're going to sell your gold, it's all the price just bounced. Right? Like, you got to block out the noise. All of that stuff is just noise. The only thing that matters is price on a chart. That is it. Super long-term look on gold. Has it been parabolic? Absolutely. Did it find the upper value range up here in the point of control and seems unwilling to break through it at this point? Yeah. Is there a lot of air between price and the monthly T-line and 5 EMA? Yes. Is it well extended from the 20? Yes. In other words, the horse is far away from the barn. So you could see a pullback on this chart to these levels, which would be totally appropriate. Right? But it's when people look at one time frame only, and particularly the shorter ones, that they're freaked out. Just exhale, right? Learn to breathe. Just calm down. Right? It's just one candle at a time. This is still a bullish chart. Are you trading above all support? Yep. Still bullish. You can see the risk to the downside. And that's important. And when it starts to come back and tag, then you've got levels that you can look for. But currently, for now, it's still a bullish chart. Let's look at lift. Whoops. You can send in your tickers if you want. All right, so this is a little all over the place. Let's take some noise out and go to the weekly. I don't mind the weekly. At all. Like, it's obviously, I love this. Like, look back here. So this green candle that printed this signal, this comes right at the point of control, and all of this blowing through all of these major moving averages. Like, that kind of stuff, I love to see that. Even this, this pullback here, again, didn't break trend, right? So yeah, you've got 3 candles to the downside, but the T line and the 5 EMA is still diverged, right, to the upside. Right? You're still haven't broken anything yet. And this is why we wait to get signals, because I can guarantee you, as this is unfolding, it looks very different. Right? In some cases, you're going to flash signals on and off, and it can get confusing before they close. But the trend was still intact. This big flush candle doesn't break the trend, right? All that divergence stays in place, so it's still a bullish chart. It's a little chaotic though, but it's still a bullish chart. And if you come back, if it starts to fade, you're going to come back to the 20 for sure, and then you've got the upper value range in here. But look, on the weekly, the 50 and 20 and 100 are all spinning together. The positive thing that you see is the 50 breaking through the 200 on the weekly. Right, so for those of you that study crosses and put a lot of stock in them, that is what they would call the golden cross, right, where the 50-day crosses up through the 200. And this is on a weekly. Happened back here on the daily. And you can see it's not an instant assertion of uptrend, right? Like, it did fade and was below, but that's how people interpret them. So that is anytime you have shorter term averages crossing up through longer term averages, regardless of the time frame, you can kind of guess that the trend is going in a certain direction. But again, bullish chart. Where could it go if it continues to move higher? It wouldn't take much to eat this gap up and eat this candle up. So it's there's $30, maybe more. Now, if, but that's the opportunity to the upside anyways. So it's not terrible. And you have an understanding of where your risk is, right? And you don't want to break in this kind of market. If you start breaking levels, you really don't want to hang around. Right? It can feel really sketchy. Let's look at Tesla today, because I know you guys like it. So, obviously we still have several hours before we close, but this is looking a little extended. You've got your doji, the top of a leg higher. There's your 4 hour. Still bullish on the 4 hour. Obviously this is all diverged to the upside still, and you can see that price will probably be attracted to this upper value range where it's played around a little bit before, and at least test it. But if it doesn't hold, this is test and fail. You go back, collect yourself, try again, fail, try again, fail, try again. Like, it's just rinse and repeat. Bullish, probably will want to test that. If it rolls, you're going to come back, test the 5, the T line. There's your your point of control, and you've got the 50 in there as well. So those are the levels that it may want to look for to the downside. You want to avoid this, because again, price can fall into these gaps or shoot up into them quite quickly. But it's good to know that where they are. Right, here it is on the daily. This is light trading, remember, right? So this is the dense stuff where the color is, and this is light. The gaps still have the same effect, just with less volume and money to help you hold it up. So this becomes a risk. You know, this level in here, the middle of that gap, as a target to the downside if it rolls over. Assuming that you break the 50 and 20. I don't like how they're starting to arc to the downside, but that's for there. Let's look at United Health. So, it's kind of interesting. So here we are, failing the 50 and unable to break the 200. We didn't even really challenge it. If this rolls over, so this kind of failure of the 50, if this is a failed breakout and rolls over, we're probably going to come back down to somewhere in and around here, or the 20 MA. But again, here's your point of control. Price will look for where it's been before. And this is a lot of it. And on the weekly, what do we look like? I'll explain this in a second. So here's our weekly. Big move to the downside. A little bit of a recovery, right? But where are we getting a little bit of a headache? Right here at the 500 weekly. Price rolls over, a little bit of support from the 20. You would think that it would want to test this level again to try and break out and test the 50, get into that gap to the upside, and that's how you'll find the 200 again. But if it's not able to do that, let's say this is unable to take this level, either rolls over here or rolls over up here, the end result is still the same. You come back and take out the previous wave's low, and now you've got the POC beneath you on this weekly as a greater draw. What do we see on the monthly? This big gap is created by these parabolic candles to the downside. Is all that happened on the monthly chart is that you had this big move down, slight retracement to the upside. That really is a failed breakout. Look what happened on the monthly. You wicked that average to the penny and then pulled back right away. Did this divergence to the downside change direction at all? No. So the longer term chart was telling us that we were still in a downtrend and that we haven't completely reversed yet. Broke the 20, found the 50. Broke the 50, found the 100. Broke the 100, do you find the 200 beneath? Came darn close. Back here, didn't tag it though. This level down here, I know it sounds crazy, it's $200. And it's simply benching some past price. I think we may have done it on the weekly. Yeah, it's picking all of this up here. So the bottom of these candles, and then the base of this through the left. Just like how we showed on oil that these train tracks or skis can sometimes come back and price to revisit it. You haven't been able to get into this gap to the upside. This is still vulnerable to more downside. You have not, this weekly chart fired a signal 3 weeks ago, and it's still in play. Price again here, unable to break the 500 and unable to break trend as of yet. And there's still price to draw to the downside. This will be interesting to see how this works out, because this thing got really beat up hard. As you can see, again, going parabolic on any time frame does what? Spreads out your averages. This is what it looks like on a monthly chart. How many people were at $600. And I don't care what happened here. I don't care. It's just a chart. It could be any other chart. It could be a 5-minute chart for TD Bank. Doesn't matter. It's an obvious top. You come back and you start checking levels one at a time. And you have the chart communicating with you, telling you that your trend to the downside is still intact. So what you're seeing here is what you're seeing on every other time frame we show. I'm still not convinced that this is 100% reversed. Move to the downside, couple retracement candles that fail, you roll over. Just like on Bitcoin where we saw the move down, little retracement, move down, little retracement, and so on. And then on the weekly we showed one move down and then a couple weeks of green candles. Well, here's a monthly example, right? But price behaves the same. So if no money comes in, or an insignificant amount, to change the trend over this longer term, what do you think is going to happen? It'll fade again. Why? I don't know. I don't care. Because all I know is that you were told to go short. That's all you know. Strategy. There's past price. There's your parabolic move, spreading out all your averages. But lo and behold, nothing goes up and stays up forever, and when it comes back to check things, one level at a time, if you don't find support at these levels, you continue to fade. What is down here? What am I missing? Oh, there you go. It's a 1,000-day moving average on a daily chart. So does anyone agree that if this retracement to the upside was to fail at the 20, and again, it's the first attempt of the 20 since it broke, same would apply to the 500 and the 50 in this case above it. Those first attempts typically get a little bit of a pause and a higher probability of an outright failure. And if that fails, you roll over, you take out the previous wave's low. And then you probably kick off the next wave of the downtrend on that time frame. There's your weekly version. One big essential move down. Two green weekly candles that have done absolutely nothing to change trend. You haven't even challenged the 5 EMA. Does that make you feel more confident that it's bullish or less confident? For me, it's less. It hasn't showed yet on this time frame that it can do what it needs to do to break this trend. It hasn't showed us on the daily that it can break trend. And if we back it up again, here we are on the 4-hour. And that must be the 1,000-day on the 4-hour. So we're not there yet. Remember we talked about the heavy lifting that had to be done before all of this would change? This is what we're talking about. This is the heavy lifting. There's Apple's next 4-hour candle. Also red. You can see how the momentum of price to the downside pulls these averages down quickly. And because price was so parabolic, look how much downside selling there is, and still hasn't dragged that short-term average down enough to change the trend, even with all of that selling. And here you've got the 20 on that time frame, the 4-hour first touch. So does it bounce? You got to wait and find out. And if it does bounce, what do you think it's going to look for? If it bounces from here, obviously once it breaks through this level again, it's going to look to take out the previous wave's highs. If it fails the 20, and it might take one candle, it could take 3 candles. But if it fails here, you're going to look down to the next level, which is the 50, and of course this upper value range, and then you've got this big gap. We know what happens when price falls into these gaps. So we have lots of things to be able to watch over the next couple days. Here's your 4-hour NVIDIA chart. Right? A little bit volatile, I guess that's the best word I can use. But here you are, you follow up this green candle with this one that wants to make an equal top. And at the very worst, is it going to come back and check the point of control on the 4-hour? Probably. You've got the 200 in there on this time frame. You have the 50 in there on this time frame. But overall, there's your resistance, the 20 MA. Be careful longing into resistance. Is this the first attempt of the 20 since it broke it here? Yes. In this ridiculous candle. Has the trend changed, by the way, on NVIDIA at all? Let me blow this up. No. I haven't looked at this chart in a couple days. This was a strange looking top, but here's your signal. But you had lots of opportunity to get out of this thing because it looked terrible. But the reality is that the downside trend has not changed. Have you had green candles? Yeah, green candles in a downtrend. Just like we talked on Bitcoin, you got to see how this thing reacts when it gets to that 500 MA. Because it can do something like this. Not everything happens in the amount of time that you want it to happen in. And one of the takeaways that you're going to have from doing this is that you'll have an appreciation for time in a different way. When you're looking at the chart and you want something to do something and it's not, time stands still. Right? And then ultimately you could be wrong. Right? You could be thinking that, oh, I'm going to break through here, get into this gap, and I'm off to the promised land. Well, not always. Right? Does price go up more often than it goes down? Yes, it does. But when it goes down, man, does it ever go down, as you can see. And when that's the case, again, you don't want to be long in these kind of moves. And if you, or short in here, thinking that you're catching, oh, it's going to roll over here, nope here, nope here. And before you know it, you're out of money and you've paid so much in fees that, you're angry about it. So just follow the chart, right? Try and have some fun with this stuff. It doesn't matter what we look at. You're going to be able to have some fun. Right? This is the, what do they call this? Liberty Financial or something like that. I think this is the Trump kid thing. Right? Here's the daily. Now, it's a good example of a difference between narrative and what you see on a chart. Doesn't look like much right now. And anything, it's looking like it wants to sell off. And the momentum indicators are kind of confirming that. What's the 4-hour look like? Oh, lo and behold, there's resistance. Right? Be careful longing into resistance. For a reason. Right? Now, if you're telling me that, okay, you're waiting for these failures at resistance and then you're opening shorts, well, that's a different story. Right? So here's your resistance. You could have taken a short anywhere up here. Here's your confirmation. Broke one level, found the next, break one level, find the next. Look, it's at a penny. We don't make this stuff up, right? Like, we're showing it in real time. Now, this candle, because we have no idea of knowing what's going to follow this particular 4-hour candle. But what does the chart tell us might be happening? Is this divergence still intact to the downside? Yeah. Is our stochastic RSI, which was once overbought, rolling over and with momentum to the downside with this kind of divergence between between K and Y? Yeah. Look at your Fisher, same thing. So you have signal, you have things that are telling you that you're okay to continue to stay in the trade. And of course, you're running stops, so you're going to be mitigating risk so you don't give stuff away. And if you get stopped out and the trend is still in the direction that you were originally in, you'll have an opportunity to get back in. The trend reverses, well, then no harm, no foul. But the chart's telling us what it's going to do. Where could we sink to? So we've broken the POC, finding a little bit of love at the 100, but I don't expect it to last. Here's this gap, and then more down here. Wants the 200 or less. Simple. Doesn't matter what we look at. The chart is telling us what's going on. Now you can look at this one daily candle with a sell signal, unsure of what might be happening. Does we hold? Do we fail? Just back your time frame up. There's too much draw to the downside here, excuse me, for it not to want to test it. Just follow the chart. Pick your time frame, follow the chart. Look forward and backwards so that you don't get hit by something you didn't see coming. And it's really as simple or as complicated as we make it. Quite often, we make this a lot harder than it needs to be. We'll take one quick look at NASDAQ. Still a bullish chart. Excuse me, red candle in an uptrend and trending, you can see the trend is up. We can see the downside risk, it's substantial. But it's still a bullish chart. If we back up the time frame on NASDAQ, this is the NAS 100, which is the contract. Look at it hugging the 20. Right? This is what you want to be able to see. Right? Continue to get support when you need it. Rewind, play, rewind, play. If you don't hold the 20 or continue to hold it and you start to break down, and again, we haven't printed a sell signal here yet, but what's the downside risk? There's the 200 and there's the 50, and this is a big gap. And just keep looking for what the draw for price would be to the downside if it was to roll over. Just like as it starts to break out, like here for example, you're looking for, hey, what would it be looking for to the upside? Level by level. Don't let these, you have this big move up and then all of a sudden you retrace a little bit. Don't panic. Right? You look at the support you have from the 200 and the 20 in this case. You got support there and you never broke trend. All right. Excuse me. Just follow the chart. I'm starting to lose my voice, so I should probably wrap this up before I lose it completely. But if there aren't any other questions, if you guys don't have any other symbols you want to look at today, I think you've been able to see, in essentially real time, why we do this. Right, let's just go back to this daily Bitcoin chart. You had to know that price had to figure out what it had to do at resistance. This just could simply be, a red day that doesn't break this upside trend, and tomorrow you print a candle that breaks through. That's highly possible. The takeaway for everyone is, though, don't make an unnecessary mistake. Right? That's all we're trying to say. There's a lot of mistakes that get made that really didn't have to happen. Shorten the time frames up, like to the 4 hour if you're looking at the daily, to see if you can see what's going on inside that daily candle. And knowing that everything is fractal, you'll understand that, on the 4 hour, we're susceptible to a pullback to these levels. We see the volume gap. We see the POC. And that helps us understand what this could end up looking like. Like those lower levels will be the 20 and or the T line that I just showed on the 4 hour. Break those and then you understand what happens. All right, so if there's not any questions, I'm going to sign off, and I will see you guys on Tuesday of next week. And if you have any questions at all in between now and then, you know where you can find me. Have a great weekend.